So chapter 2 we split into two slides. The first slide will discuss about four risks. Basically, there is political risk, economic risk, and then we have financial risk. So all those things will be discussed in the first part. Call. So in chapter 2, we will give you a scenario and a situation, and then you have to identify what are the risks associated with the case study. So you need to take out all the possible explanation, situation, or the condition related to the risk that might affect the business or corporate organization. So because of that, I'm preparing you one thing for us to discuss. So this is one of the examples. So at the end of the session or maybe next week, we are going to discuss about this one. This is the case study related to the credit crunch 2008 US subprime mortgage crisis. So we have to discuss about what factor and then what is the term being discussed in the case and then how it starts. We need to see what are the contributory factors. So what you need to do with the case study, basically when you get a long essay in the exam, you need to find the factor and then you need to understand what does the case study related to. Maybe it related to the political risk, maybe it's related to the economic risk, but at certain point, it can be a combination of variety of risk. So that is one of it. Another case study that we are going to discuss is about cyber risk, technological risk. Today you heard how people are being conned through the phone, their money being siphoned in through the phone, and then you get a scammer spoofing all those things. So when we speak about that, it is associated with the cyber risk. And since COVID-19, we have no choice, but we need to reassess and we need to make sure that we have a best strategy to avoid the cyber risk because during COVID-19, a lot of us basically depends on the technological usage. So it is very important for the business to avoid cyber risk in their operation. So that are among two case study that we are going to discuss. So when we discuss the case study, apart from seeing the factor, we also need to assess the implication. Why? Because when we enter chapter 3 and 4, we are going to learn a little bit about the severity, about the degree of implication, whether the risk will become at high level, critical level, low level, and medium level. So this is what has the risk. If you did not control it properly, or maybe you fail to control or identify the risk, this is what it can cause to the business, to the industry, or to the economic sector. So this is among one of the case study, and we have a certain lesson that we need to be learned, but it's okay, we save this one for later. Now for today, let's take a look a little bit on risk, the type and sources before we go to the video presentation. So chapter 2 will discuss about type and sources. At the end of this thing, normally you need to understand the sources of risk, whether it comes from the external, internal, and then whether it can be controllable or uncontrollable. Second, normally you can understand the risk facing by organization, whether it is from the economic, credit, default risk, cyber risk, employee malfeasance risk, all those risks related to the organization. Third, understand the risk exposure for the organization. So when we speak about risk, most of the time we can identify how we are getting exposed to the risk. For example, if you work for the bank, so the risk that you need to assess is related to the transaction, related to the fraud, related to the scam. Why? Because this is one way how the hacker can actually uh, put cyber risk into your organization. But on certain occasion, we might have risk exposure that we could not expect at all. So for example, I think the common one at Malaysia last time we have Cadbury Gardenia being accused using non-halal ingredient in their food. And then we also have McDonald's receiving bad publicity, saying that they are using the profit to fund terrorist activity. So this bad publicity is what normally this business did not expect to have. We have a countermeasure to reduce this risk, but normally we cannot predict this kind of risk. It might start from rumors, some and finally, number four, we identify possible type of specific risk associated with the organization. So what make this different with number two? In number two, normally we identify in general how can it impact the organization. But when we go to number four, there is certain specific risk associated with the business. For example, if you are working in the biopharmaceutical company or chemical company, you have the risk to create harm to the environment, to create harm to the, or you are going to create pollution to your country. So we are going to go deeper and see what kind of specific risk that can be assessed before you actually make it as a bigger risk that can harm your organization. Okay. So the first one is about risk identification. So last week when you go to the risk management process, the first thing that we need to do is risk identification, because we need to identify before we can assess, before we can manage, and finally before we can monitor. So the aim of risk identification is to identify possible risks that may affect either negatively or positively the objective of the business and the activity under analysis. Risk identification can be done by evaluating the following question. So the first one, what can happen? How can it happen? And why could it happen? So when we speak about risk, previously maybe in investment subject, maybe in your insurance subject, we are focusing on the bad outcome. But when we are taking risk management, we need to know that we have pure risk. Pure risk normally will result in a loss. You invest, duit you hilang contohnya. Ataupun you park the car, someone stolen your car. That is pure risk. So, pure risk normally associated with the bad outcome. The thing that we buy insurance for is a pure risk. As a human, when we ride a car, there is always a risk to involve in accident. Do you get bad positive outcome or good outcome from accident? Normally no. Whether you are going to die, whether you are going to injured, or whether you are going to walk out fine. So that is the outcome from the pure risk. For example, the accident. Same goes with if your house caught into fire, whether you are being saved by the fireman, you selamat, but the house still going to burn down. So you still have the loss in terms of pure risk. Another risk that we have is speculative risk. So what is speculative risk? We can split into two parts. The first one is negative outcome. The second one is positive outcome. When the risk is speculative, meaning to say we cannot predict what the outcome will be. If it is downside risk, that means that the risk will turn out to be negative. But if the risk is on the positive or upward side, then there is a chance that the outcome will be positive compared to the downside risk. So that one is basically what we discussed last week in chapter 1. Maybe you can check back if you want to see what are the upside and downside risks. So there are two main ways to identify the risk. First is retrospective risk. This is previously occurred. So we have to put the probability that most likely it will happen again. So retrospective risk identification, often most common way to identify risk and the easiest. Easy to believe something that is happened before will happen again. And then it is easy to quantify impact and see the damage it has caused. For example, if you work for a factory, previously there is an injury or there is a worker die due to the occupational hazard. So every year when you have risk management committee meeting, you have to put occupational hazard as one of your risk identification because you experienced it before. You see how the workers die from the activity, from the injury. So what can you do? You can put it as one of the possible risks that in the future, there might be another worker that will face the same incident. So as a risk management committee, what can we do to prevent the death of the worker from the same event? So that is one way how we identify the risk. We learn the history, we take it, and then we do the preventive action from the history. Second one, there are many sources of information about retrospective risk. These include hazard or incident log, audit report, customer complaint, accreditation document, previous staff, and then publicity from the media. So how can you know whether you have history of accident or a risk in the organization? You can read it from the public sources or from the private sources. The second one is identify prospective risk. So when we speak about retrospective, I'm pretty sure you are familiar. In accounting, we basically work with the retrospective number, meaning to say transaction already happened and then we do the recording, we do the analysis. But when we speak about prospective risk, this is something that we cannot predict. So under prospective risk, the risk normally very hard to identify. These things are not yet happen, but might be at certain extent in the future, it will happen. So identification should include all type of risks, whether they are currently being managed. The rationale here is to record all significant risks and monitor and to review the effectiveness of the control. So how can we identify prospective risks? We brainstorm with the staff, research the economy, and then we conduct interview with relevant people. We do the survey, we do the flow chart, and then we review the system design. So one good example of prospective risk is basically COVID-19. Nobody around the world predict those things to happen. To be precise, no one see it. It will come as a pandemic. We heard about H1N1, we heard about influenza, we heard about SARS, we heard about Ebola. But those things first did not reach Malaysia, or even we get H1N1 last time, it is not declared as pandemic, meaning to say it still can be contained, it's still controllable. But when we receive COVID-19, whole country around the world is heavily impacted by the situation. And then that is why WHO has to declare it as a pandemic because the severity, the risk that COVID-19 bring actually affected most population on the earth. So prospective risk is what normally management accountant or risk management committee to need to oversee. When we become financial accountant, our job is to record the past transaction. Our job is to do the reporting, to do the compliance. But when we become management accountant, we need to make sure whatever things that we plan for the business can assist us to make the best decision making. So if you still remember, flashback to the semester 1 or semester 2, the role is both for decision making, but financial accounting to help external user. Management accountant need to help internal user. So how can we help the organization? By predicting what kind of accident or what kind of risk that we are going to face in the future. So this is quite hard to do, but there is a way to do the prospective risk evaluation. So what are the category of risk? We have a lot, and it varies from one organization to one organization. Meaning to say, if it is related to your business, then we can put it as a part of risk categorization. So while we have a lot of risk categorization, one of the framework is this four. So we have strategic risk, operational risk, reporting risk, and compliance risk. So, meaning to say, this is the common strategy of risk framework being used by the business. And I took this from SEMA P3. This is quite common practice and official in terms of risk management committee. So the basic one is strategic risk. So this is arise from long-term effect, such as those relating to the nature and type of the business. So strategic risk is the risk that when the business fail to identify, it will actually collapse your operation. One of the good example is Nokia, Motorola, BlackBerry. So a lot of these mobile or telco company actually fail because they cannot move on and they cannot identify their strategic risk. How did Nokia fail? Before we have Apple, before we have Samsung, Huawei, Nokia basically dominate the mobile phone industry. So if you flash back, I think from 2000 until 2010, Nokia actually, a Finland company, dominated the mobile phone industry. In 2008, when Apple and Samsung start become a player in the market, especially Apple, Nokia did not want to innovate. At that time, we have iPhone 4, the first model from Apple that introduced the keyless mobile phone. Nokia at that time speak with the CEO, but they choose to remain with the keypad phone in 2008. So because of failure in identifying the customer demand and how consumer want their phone in the future, Nokia market finally collapsed in 2012. So just 3 to 4 years after that incident, Apple and Samsung dominate the mobile phone market. So this is the strategic risk. Strategic risk can come from variety of sources. In COVID-19, what are strategic risks that the business has to change is the strategy to sell their product. When we were hit by COVID-19, the pandemic, we get MCO, Movement Control Order. Tak boleh ke sana, limit 10 km, beli barang keperluan. What happened? A lot of people getting angry, especially the single one, the one who don't cook at home, the one who prefer to eat out, to tapau their food. So a lot of business moving to the delivery services. But the business that choose to not do delivery services will have some difficulty because consumer has no choice and we are moving to the online process. Kalau you tengok dekat Malaysia, Miss rasa another example will be Shopee and Lazada. Nowadays, youngsters like us choose to not shop at mall anymore. If those things available in Shopee, we will pick Shopee platform first. So a lot of company, if you can see, My Day, Mr. DIY, what else? Samsung official store, Senheng, a lot of them now migrating to the online platform because they don't want failure in identifying customer demand will actually create a harm or bad impact to their business operation. Then second one is operational risk. This is short term, day to day problem. So sometimes you went to the factory but the machine cannot be used, or you went to the factory, your supervisor positive COVID-19, you have to close the section. So operational risk normally focusing more on the day to day problem or activity. But the bad thing about operational risk, if you did not mitigate or if you did not tackle it properly, then it will become strategic risk. Okay. Kalaulah risiko tu sering berlaku and we fail to address or we fail to prevent it, then for the long term, if it keeps repeating, then it become your strategic risk. Example, apart from machine, let's say you are making final product of medicine. Katalah you buat ubat. So one of your raw material is drug, dadah. But this drug only has one supplier. You ada satu je supplier dadah ni. But you need that drug to make your pill. Okay. So this supplier always send stock late. They delay in their shipping. Sometimes they send quantity which is not enough, and then which is different from what you order. Kalau you order 100 kg dadah, kadang-kadang dia tak cukup, dia hantar 50 je. And you promise the delivery will receive in 7 days, but it come in 10 days, for example. So first, we consider it as operational risk. Why? Because it will interrupt the operational process. You cannot do the manufacturing. But if this thing happen for the long term, keep repeating again and again, then it become your strategic risk. When you get delay shipment of your raw material or under stock your raw material, what happen? Your production will be delayed, your production number will be smaller. So the consumer or customer at the market, while waiting for your product, they basically will find another alternative for your product. Sebab apa? Pergi farmasi nak beli your ubat, asyik habis ataupun belum sampai stok. So in the long term, it will actually impact the business organization. Reporting risk, this is the risk arising because internal and external reporting are not reliable. For example, management account containing errors that can lead to incorrect analysis and decision. So when we speak about reporting risk, this is more on the compliance matter. Sometimes we cook the book, sometimes we do sort of earning management, sort of what we call creative accounting. So reporting risk maybe a little bit difficult to identify unless you come from the accounting background. Maybe you're an auditor, maybe you're a tax accountant, then you can see a problem with their reporting. But if you are commoner, rakyat biasa, reporting risk normally is something that hard for you to identify unless they totally report some ambiguous or unacceptable figure. Contohnya kalaulah dijual tahu bergedil tapi tiba sale dia sampai 2 bilion, then it will be quite apparent lah to the people who read the accounting statement. But apart from that, normally we found a reporting risk from the auditor. So we have a lot of cases. We have Enron, the collapse of Enron in US. We have HP scandal and Dell scandal with the auditor last time. But what we want to see later in chapter 3, I will share with you one case study related to Malaysian company, which we call Serba Dynamic. This is quite hot, very new in the market. They have this reporting risk. What does they have? First, their auditor reported that there is some suspicious transaction in their accounting book. So what does the company do? They received the audit report, they fired the auditor. They fired the auditor of Server Dynamic. They appoint external auditor to assess their accounting report. When they appoint the third party auditor or the external auditor, then the auditor reports some finding, but the business did not declare the finding in Bursa Malaysia. So Server Dynamic is public listed company. And finally, it gives impact to their shareholder and reputation. But that one is okay. We will save it for the chapter 3 about the Server Dynamic scandal that we are having today. And finally, compliance risk. The risk from not complying with rule and regulation, penalty, loss or reputation and removal of operating license, all can result to the compliance risk. So if you are doctor or you run a hospital as your business, you need to make sure that all your staff conduct a due and faithful manner so that they did not abuse or neglect their patient, for example. So all those things related to the compliance. If you're working in the chemical company, you need to comply with a certain environmental health and policy so that you did not release a toxic to our environment. So level of risk, we have 3: qualitative, semi-quantitative and quantitative. Whatever it is, the risk normally something that we need to quantify, meaning to say risk need to be measurable. We can measure the risk and then we can identify how severe the risk will affect our organization. The most common type of risk analysis is the qualitative method. The type of analysis is chosen based on type of risk. Identification can be done by the management based on the risk appetite of the organization. So this will be discussed in the extent in chapter 3 when we go into detail about the risk management process. What type of risk, how you want to measure, how much you can tolerate. We have a cube of risk that we are going to utilize. So two types of risk. The common one that exists, very basic, we have systematic and unsystematic risk. Systematic risk is undiversifiable, meaning to say we cannot control. No matter how good your strategy, no matter how good the business plan to reduce the risk, we cannot control the risk. Unsystematic risk, on the other hand, it is diversifiable and we can control the risk. So we can reduce the risk based on our risk mitigation strategy. So when we have risk, one way or efficient way to reduce and mitigate the risk is by doing diversification. What do we mean by diversification? We spread the degree of risk. The larger your spread, the lower the risk. So for example, you get or you have 100,000. Katalah you ada 100,000. What will you do with 100,000? You choose to invest. So if you invest in one portfolio, katalah you invest dalam AirAsia. And then because COVID-19, AirAsia receive a bad impact from the pandemic. Tak boleh travel, harga saham jatuh, banyak hutang. So your 100,000 might become loss of investment. Maybe value saham tu no longer 100,000, but it become 80,000. So that is if you only park your money in one portfolio. But if you spread your 100,000, 10,000 letak dekat fixed deposit, 10,000 dekat ASB, 20,000 dekat saham, 20,000 dekat bond, another 20,000 at unit trust, for example. So you can actually reduce the risk. Kalau saham rugi, you have another 80,000 money as a backup. So that is how we can mitigate or reduce the risk. So systematic risk, undiversifiable, the risk cannot be eliminated. Now, why is it so? Because of the third box. Kenapa tak boleh eliminated? Because it is external risk, something that we cannot control. If you cannot control, meaning to say you cannot eliminate it. Normally it will affect all the securities or all the business in the same manner. So if you have investment, all of them will be affected. For example, economic recession, political distortion, changes in interest rate, war, and natural disaster, plus COVID-19. So all these things is basically systematic risk. When the country is unstable because of political distortion, investor or business normally did not want to invest their money in the country. If we have a war, also the foreign investment will not come to our country. So all these systematic risks can actually affect our organization. Unsystematic risk, on the other hand, diversifiable, you can eliminate because this is a controllable and internal risk. So the risks are unique to your own business and only affecting your business alone. So what are the example of the risks? We have mismanagement of the company. If you pick the wrong CEO, CFO, CTO, we have consumer preferences and labor strike. So all these things is basically caused by internal factor. For example, labor strike. Last time in Malaysia, we have labor strike from before COVID-19, kita ada labor strike daripada transnational punya driver, driver bus. And then we have a labor strike from the Uber driver. And during COVID-19, we see few labor strike from the Grab driver, from the Food Panda rider, from the JNT rider. So all these people are doing strike because they did not receive what supposed to be their right. That is what they claim when they do labor strike. In government, we also have hartal doctor contract. So all those things happen because top management did not fulfill their demand and their condition. Then we have mismanagement of the company. We choose the wrong top management that actually doing a suspicious or shady activity in the business. We have the scandal of Tabung Haji last time. We have the scandal of Telecom Malaysia. The recent one, we have a scandal of 1MDB and so on. So all those things because of mismanagement of the company. Now, the important part of this one that can actually affect organization strategic risk is consumer preferences. So consumer preferences, we can see from two dimensions. First, how actually the consumer preferences can make your profit decrease over the long term. The second is external factor, but what can you do to minimize the impact? So we speak about the first one, how actually consumer preferences or attitude. In marketing, we call it consumer loyalty. How can their loyalty actually cause reduce of your profit? If you underproduce your product, you understock your product, contoh yang pil tadi lah, you understock the drug. Tak cukup stock, you underproduce the product. When you underproduce the product, now you unable to send to your distributor. Sepatutnya katalah you produce 100,000 per day and you send through Kuching, Mukah, Bintulu. You send to all small town as well. But because of the shortage in raw material, you only can produce 50,000 per day. When you produce 50,000 per day, you cannot send to the small town anymore. Sebab cukup. You only can send to Bintulu, Miri and Kuching. So what happened? If your consumer or customer loyal to your brand and they went to the pharmacy brand, pharmacy cakap, Okay, kita tak ada brand awak nak ni, tapi ada brand lagi satu, content dia sama je, tapi company dia berbeza. So customer said, it's okay, I take it because I need to use the product. So when customer take it, to actually change the loyalty. Next time when the product is come to your town, customer might not choose your product anymore because they already taste the competitor's product. So this thing might look small, but if they spread the word to the family members and friends, then you are going to lose a number of customers, which actually will impact the profit of the business. So that is one of the unsystematic risks that can be controlled by the business. To make sure your customer happy, you have a loyal customer, make sure you produce enough quantity to cater the market demand. Another one is something that uncontrollable by the business. Example, bad publicity. You elok je berniaga McD, elok je berniaga Cadbury, suddenly keluar dekat IG and Facebook, people accuse you using non-halal ingredient. So in this case, it is something you cannot control. But can you reduce the risk? Yes. You can do the press release, press conference to address to your customer that those things actually did not happen in your organization. If you buka laman web McD, laman web Cadbury and Gardenia, they have the press statement release in their website stating that they only use halal ingredient and McD they did not fund terrorist activity. The recent one, kita ada satu publicity bag related to the business that we just received I think 2 days ago. Apa dia punya tu? About the biscuit. If you read the news about biscuit, ada biscuit kita export ke Hong Kong. Julius, Munchies, Hapseng. So when the Hong Kong authority do inspection, they found that ada 60 biskut yang mengandungi chemical component that can cause harm to human. Kalau you makan, bahaya kepada manusia. So one of the selected brand is Hapseng. So what did Hapseng do? They go to KKM, ask KKM to verify, and then they release the press statement. So if you can see this is related to the consumer preferences. Bila kita dengar laporan Hong Kong tu, orang yang suka makan biskut Hapseng, cicah kopi mesti fikir, selama ni I create a harm ke to my body? Something like that. So what did Hapseng do? They do the damage control. So sometimes unsystematic risk, you can reduce, but the sources also uncontrollable. Okay, so that is the first part on how we identify and categorize the risk.